So we'll start off with BTC. Now, as we all know, the crypto market hasn't really done anything, hasn't really gone anywhere, hasn't really, it's flat as a pancake. It hasn't really gone anywhere at all. It is just in this sideways consolidation movement, and we're going to get a breakout one way or the other. We're going to get a breakout. It is going to happen. The question is, in what direction? That is the only question that we're going to have. Which direction is it finally going to break? Is it going to break to the upside, or is it going to break to the downside? And that's the only question that we have. It's not a matter of if or when it's going to happen. It's just literally whether it's going to break up or down. Now, as you know, I have a couple of positions already in this. So if it breaks the upside, perfect. If it breaks to the downside, then again, I have an order here as well. So personally, I probably like it to drop down to the 20 grands here, and then I would buy some more of it. And for me, it probably has a better starting point at 20K than it has at 30. But again, we just need to just sit and wait and see how this runs. So Cardano has been one of the cryptocurrencies that's been doing quite well. It has been trading between this channel, and anyone who bought it down here, well done. I assume you exited or par closed some of the position at this level, or did you guys stay in it? Or was it one of those trades that you just buy at the bottom and just hold long term? How do you part close a position? Still in it long term. Okay, cool. Well, you could be trade if it comes down to here. You could actually trade this short term. You could actually be buying this short term. Pops there. You could close half the position, which means then you theoretically have no money in the market. If that makes sense. When I say theoretically, just say you risked 100 quid here. You risked 100 quid here. It went up and you made 100 quid. We'll just say that 100 quid. You par close it here with 50 quid, which means then you've banked 50 quid. There's 50 quid on the table. It means that you can't lose. Okay, but again, it depends on how much you've risked there. Or if you buy it here, whatever profit you have here, close the original position and just leave the profit running. Okay, you can do that if you want, which means then you theoretically have no money whatsoever. But how you par close a position, if you go to profile here, so here are the trades that are running. So they are the trades that are running. So we'll go down to one that's open at the minute. And where's copper? Okay, so we just go to copper here. See the X here? So if we're going to close this trade, we just press on the X. See where it says close only part of my position. Click on that there. Now what it's going to do is it's going to close 50% of the overall position. Okay, so the math is set up already to close 50%. So it's like that, it'll close 50% of the position, and then, but you can change this to higher or lower depending on what you want. But again, there is, as far as I know, 50. There is a minimum, so 25 quid on leverage. And I think if we're on a stock, it's 50 quid, if I'm not mistaken. So Tesla, par close this position. As far as I know, 50, yeah. So on a stock, it's 50 quid. So that's how we would do it. So Ethereum. Okay, where's all the analysis gone on this one? Horizontal. Again, this one has been one that has had a little bit of a run. but it had to come down and hit that double bottom, and then I had a little bit of a run. But again, I can see them coming back into that area. I can see them coming back down to that floor again. I can see it. I can see them taking off without it. And in all honesty, I can probably see these altcoins going a little bit shorter. I can see them probably going a little bit further down to the downside. Whether Bitcoin goes down to 20K or not, there's probably a little more downside on these altcoins, because if crypto continues moving sideways, people will lose interest in these. People will stop buying into these. People will stop trading them, and that's what's happening at the moment. So you saw the likes of 88. It's actually trading between two levels, and that's all people are doing now. They're trading it between, they're scalping in and out on the cryptocurrency. So they're buying it at a level that they want to get in at, and what they're doing is they're scalping when it goes back up there, jumping out of position, and then when it comes back down, they're jumping in again. And that's one way of trading. Now, I say scalping, you're trading it rather than scalping. It's not 1 or 2 pips. There's a pretty decent movement on the likes of that. So again, for me, this will probably come back into this area and then look to bounce. Again, like kind of something similar. It had come back down to this level, but that's where that level is. It actually retested the bottom and come back down. So for me, this one looks like it has more downside than the other ones, but we do have another little level there. One, two, three, four, five, six, seven, but I wouldn't be confident of that hole in there. Not at all. Not at all. Potentially there, 83 level or the 89 level. There would be the area I would probably expect this to go. But again, only time will tell. It comes down to whether people see value in it once it comes down to those levels. That's literally what it comes down to, if clients see value. So for me, Chainlink would have to come down into this area here. So the 9.89 for me to look at it as something that's valuable. So potentially put a little order just inside there at 10.5 on this particular one. So for me, there's a potential order right there at that. But again, it has to come down to that point before I'll be interested in getting into it. And the same with Tron. Tron has had a nice bounce there and there. So again, I'd expect that to come back down to this level. And if it comes down to here, then we'll potentially look for it to bounce again. But once it hits this level, we'll have to see what's going on in the crypto market. If it's bullish, then we'll expect it to bounce off. If it's sideways or bearish, then we'll expect it to continue dropping. Anyone want me to look at any other crypto before we change pace onto FX or stocks? Matic, is Matic on this? Nope, it's not. Is it this one on Crypto Binance? Matic is there on eToro, is it? Ah, there we are. Sorry, my bad. My bad. I didn't know Matic was. Is this newly added? Because I know some clients have been trading this for a little while. So it's about a month. Okay, the problem with Matic here is that we don't, these levels are not very, what would you call it? They're not very key. We don't have key levels. There's one there, 1, 2. So 0.716. So there, that'd be the sort of the level, but it's not a key level. There's nothing to say at this particular point that's where it's going to absolutely jump from. Okay, so we don't have huge amounts. There's another one there at the 500 level, 0.5 level. So there's not huge amounts there jumping at me. If we look at it historically, it's just ran and ran. So the idea is if we can get in at some of these points and potentially buy small bits of it here, same with the likes of, same with all these cryptocurrencies, the same, these altcoins are very, very similar to trading stocks. Okay, those stocks that we were looking at, penny stocks, that we get a lot of money, and what we did was we buy up a fraction of them all. We buy up a fraction of them all, and you put, just say you have £1,000, you put 50 or 100 quid in 10 or 20 of them. Now, if 2 or 3 of them take off, you've made more money on the 2 or 3 that have taken off than you have lost over that period of time. And that's the idea with the likes of these. And that if they take off, absolutely you're in a win-win situation. And that's basically what they say. This is a punt. This is not trading. This is a punt at the present moment. Hopefully we're looking at whichever one takes off, and you have your money in the one that takes off the best. And that's basically what we're looking for. So it's sometimes with the likes of this, it's better to be lucky than good. Now, something that has been in the news lately is space. Now, this is something that I had invested in. It is something that I jumped in. I think my first entry was here. Literally, I think the first entry was right here, and then it dropped like a stone. And I think I bought back in about here. So a dollar cost averaged into it to bring my average open down. So I think I lost 20 quid on this position, but I won 37 or 40 quid on this position. So I jumped out about here. I think it was this first red bar I jumped out. Now, for me, this wasn't a trade, or it wasn't something that I was looking to hold on to. Okay. Why? Because there's the high. It's come back up here and it's had a red day already. So it means then that looking at this particular high here, we have sellers now jumping in. They're jumping into the market. They're looking at this now as a way of changing direction or changing their mind. It's not something that is, it's not something that was going on. Now, also then we had the potential for one, the launch not going ahead, or the rocket blowing up. Just imagine the rocket blew up and Richard Branson died. How badly would that affect this stock? Now, just imagine that the rocket blew up affected badly. But imagine the rocket blew up and then Richard Branson died. This would plummet. This would probably nearly go to zero. But that was also another defining factor. But then also Virgin Galactic had planned on selling £500 million worth of shares on the day of the launch, the first trading day after the launch. Why? Because the stocks had doubled in value. So they had, if they diluted some of the shares now, they were getting twice as much money. That makes sense. So they were able to raise more capital for what they're actually doing, for more endeavors. It was something that GameStop had failed to do. Remember, GameStop had a huge run, and instead of actually diluting their shares and actually getting a lump of money in the coffers, so if something happened, then they actually had a windfall there behind them. This is what Virgin Galactic have done, and that was one of the defining factors why we had a huge sell-off. We had a huge sell-off on the likes of yesterday. Okay, so it wasn't that the ship went well. It wasn't that it was overextended. It was literally because of the sell-off on the £500 million worth of shares. So that was one of the big things. Now, if this hits this $23 mark again, do we buy it? So if it hits this $23 mark again, is this a good place to buy this stock again? Because I fully expect it to hit that level. I don't expect it not to hit the level. So yes or no from people? Yes or no? Okay, so good question. Someone has said, why not $15? Okay, so I'm going to ask you a question then. So I've been asked, why not $15? Okay, so I'm gonna get you guys to answer this now rather than me, because it's one of these things that people try all the time there. And I'm going to give the opposite example there. So I said to you, I jumped out here on the first red bar. Okay, so I jumped out on the first red bar here. So I jumped out right there. Why didn't I jump out at this purple line up here? Because that's the high. And the same reason, why wouldn't I buy at the $15 here? Can anyone tell me why we wouldn't potentially buy here and why I wouldn't potentially jump out there? Oh, there's no other information, Shane. There's nothing there. This is October. There's nothing here past October. That was where it IPO'd. Nope, nothing to do with Fibonacci. So as a trader, if I'm a trader, so just imagine I'm a big buy trader, I'm a hedge fund, I have £100 million worth of money, and I was told to buy space. So I was told to buy space, and space is coming along. That's the one. Excuse me. Actually, I'll use the one here, annotations, drawing. So we have a bar coming down there. We have another bar coming down there, a bar coming down there, a bar coming down there. Now remember, we have an order right there at $15. Now I'm someone who is expecting a whole heap of money lying at this level. I expect a whole heap of novice traders to have money sitting at that level. So as a trader, what I'm going to do is I'm going to, excuse me. So what I'm going to do is I'm going to get my money and I'm going to start buying it up right here. I'm going to start getting these bars moving in this massive momentum to the upside. Now, all the money that's sitting here hasn't been triggered. So those are still pending orders. Now, once you see this big, huge green bar, what do you think is going to happen? What do you think is going to happen once they see this big, huge green bar? So when they see that big, huge green bar, what do you think is going to happen? These orders here, they're going to cancel these orders and they're all going to jump in. They're all going to jump in at, say, this point. I'll say, don't say all of them. I'll say some of them. Just say 40%. Okay? Because not everyone jumps in straight away on FOMO. Some people wait. Okay? So then the next day, because we've had my money that's in there, then we've had the 40% of people who had the pending order there. They jump in, and then you've had another big green bar. So then you have the rest of the people who have seen the likes of this drop, the rest of the people who've seen this movement going in, they're like, sugar, my trade is gone. So what they're going to do is they're going to go in here. So now you have the other 40%. Now, I'm talking about retail traders. And I'm not talking about traders, likes of you guys, the likes of me, people who have done trading for a little while. I'm talking about the retail traders, the people who have never done a course. They are just trying to make money all of a sudden. Now they're looking at this and they're going, well, there's the record high, which is there. I'm getting in here now. So there's loads of room for this to go. Loads of room for this to go. And all of a sudden, we have now had a gap up. So I'm literally following this. We've now had a gap up and it now runs up to here. So, and then you will probably get maybe 5% now people who will jump in here. Just say 5. Okay, you'll have about 10% of people who won't jump in at all. Okay, because their order was here, their order wasn't triggered. Okay, so we now have this scenario. And the people who jump in here are really happy with their trade. They're up 10 or 20% on the trade. $40 is now at 55, nearly at $60. And you're looking at a 50% up to this position. Okay, if it hits there, you've hit 50%, you're happy with your trade. Now look what happens. Next day, we have a sell-off. With a sell-off, jump, and then we have a big sell-off. So now that people have jumped in here, good. Now the difference is that I have now jumped out of my trade. So remember, I've got this movement here. I have now jumped out of my trade somewhere around there. Why? Because I'm not greedy. I know that there's one high, there's the other high, and then this is the record high. So this is left shoulder, head, right shoulder. So what I've done is I've seen this ceiling here 1, 2, 3 times. It's been touched 3 times. I can see that the body of that bar is there. So there's no coincidence that if I come across here, that the body of this red bar is actually in the top of that. So what I've done is I've jumped out of my trade now. Remember, that's an extreme here, and this is an extreme. We never want to leave it to extremes to get out of our trades or get into our trades. We want to leave it a little bit above the extreme and a little bit below the extreme. And that's what happened there. That's exactly what happened there. Is it, look, there's the level and we're slightly below it. So we never are looking at the top and the bottom. Now, if you happen to see the top and the bottom, brilliant. It's absolutely, if you get it, it's absolutely amazing. But the problem is that as a trader, as someone who manipulates the markets, okay, we, as a general rule, we do this on purpose so that you guys are left holding the bag. If that makes sense. That I have now jumped in here. I've got the movement. So this is all my money. All this movement here is my money. So this is my 100 million in the market. Now the next move is the 40% people who had their money here. So that's that movement. Okay. The next movement here is the next 40%. Okay. So my money did this one, but this and this is someone else's money. So now I can jump out of the market here, and the only people that are left is this 85% that was in the market, not me anymore. Okay, so that's the idea. It's you're chasing these absolute highs and absolute lows. So we want to get that chunky bit in the middle. We're not always looking for the absolute top and the absolute bottom. We will catch them every so often. We'll get a bit lucky. And whether it's by luck or by chance, you will get away with it. But the idea is to trade this chunky bit in the middle. So this whole section here, that's the bit that we're looking for. That's the bit where we make money consistently. It's not getting this high and it's not getting this low. Now, there's nothing wrong. There's nothing wrong with having an order here. Okay. Now, where this order has come from is that there's one bounce there, two bounces, three bounces. Okay, so to me, this is a logical area for us to get in, technically. Okay, so that's the logical area, and that's why there's $23 here. Now, if you get in here and the price continues to go down and you hit this double bottom, there's nothing wrong with you taking a second position here. There's nothing wrong with you taking a second position. Absolutely, but again, Raddy, I agree with you. This is also not a true high and low level, but it's the only one we have on the chart. So as a trader, they're the only 2 points that we're looking at. That one, and that one. They're the only 2 points that we're looking at. I couldn't care less about anything else really in the middle. They're the 2 points that we're looking at. And what we're trying to do is trying to find out, will the psychology drive it to there? Or will the psychology drive it to that area? And I'll always go to the lower point that has loads of touches rather than the one-off spike. Okay, and that's the difference. So the idea is, if it comes down, then I will just buy it again at this lower rate. And if it goes lower than that, then I won't continue buying it because I don't know where the bottom is. This could go much lower. It may not. Okay. So that's the difference, and that's why we never really wait for the high and we never really wait for the low. And a prime example of that, so anyone who's been watching my webinars for a little while, the prime example of that is ADA, which is absolutely annoying. And I'll bring it up here, chart. So we've identified this area, bounce, 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 bounce. I still haven't been triggered into this order. This order is still here. This order is still here. Now, I thought I was doing it correctly, pushing an order a little bit above this line. Okay. Now, the reason I wasn't triggered in is because of the spread. My order should have been a couple of pips, a couple of percents above that, a little bit higher. It should have been a little bit higher. My order should have been somewhere around there. I would have been in this trade. And I'd be up money at the moment. Okay, so that's the difference. That's the difference. That's a mistake that I make. And yes, I made a mistake in this. I thought that was big enough to cover the cost of the trade with eToro, but apparently it wasn't. Now, I didn't have the trade here. I think we put it on this, but just before this drop, I think we put it on. And it's been there 3 or 4 months. And look, if it drops down again, if it gets here, I will predict. If it gets here and I see it, because look at these spikes, I haven't been there to see these spikes. If it gets down to here and is there, I will press the buy button live, but obviously I'm not around. Look, and I see the spike down here. So my order is not going to be down here on this bottom. My order is going to be in this area where it hits regularly and then just above it. Okay. So that's the reason behind. Good. How long does the spikes realistically exist for? Stuart, when you're talking about the spikes, are you talking about the likes of Cardano here? Are you talking about the likes of space? Or are you talking about in general? Okay, so if we go back to sort of space. So if we go back to space here. Now the problem with this is that this sort of took off a couple of months before the takeoff. Okay, took off a couple of months before the takeoff. So you would have had to be very, what would you call it, very optimistic to think it was going to run like this. Now, I bought it up here with the optimism that I was going to continue running. The exact opposite to what I expected. And then I bought some more down here. So it turned. Now, I didn't know it was going to turn like this. I had no idea it was going to turn this quick. I was happy to sit on this for months and months and months. But usually when something like this is happening, it generally runs about a week or the day of the actual event. So we don't massively get huge announcements in the news. We don't. There's generally not a massive build up that we can actually jump in on the bandwagon. But again, we are trading news here. We're not trading. There's not technical analysis here. Now, once it pops back down here to either $23 or $15, I will buy some of this up. Because I think now space has gone into, it's now gone into space, it will start be given the likes of the government contracts. The same thing had to happen to SpaceX before it was given government contracts, before it was taken seriously. Sorry, my voice keeps going. So it had to go into space before it was actually taken seriously. And the same here with Virgin Galactic. It has to be taken, it has to go in there to be taken seriously before it starts getting government contracts. Now, the government contracts here are billions of dollars. So which means then that if it gets one of those contracts, it has enough working capital to sustain itself for 5 or 6 years without eating into the likes of Richard Branson's money. And that's the idea behind it. And then once he's working on the likes of government contracts and third-party contracts, then he can continue optimizing his own work and actually having space travel, people going to the moon themselves. And that's the idea behind it. So I do expect this to become profitable. I do expect this to continue running, and space is going to be here for the next 100 years and longer. So I expect this company to continue growing, but this is a really long-term hold and buy. But if you want to make money in the meantime, it's buy at the low here. And then when it gets to the top, maybe part close your position. Now, if I had both my positions here, I would have part closed 50% of the position. And then when it dropped down, then buy it again. Okay, so I would have been trading half the positions. Okay, but I wouldn't have, if I hadn't bought it here, I would have definitely just held on to my positions. Whether it was half, whether it was part close, fully close, and then wait for it to come back down here. But this now seems to be a pump and dump. Let's have a look here at this. And type in space. See what the pre-market is. Okay, so the pre-market is down fractionally. So it's down fractionally. So there's not been a huge push to the downside on this. But I would expect to have more sellers in the market than buyers today. But again, only time will tell. What was the other one? Was it Morrison's? Is it? Morrison's is being bought out. It's in a three-way bidding war with 3 different equity providers. And again, once you hear news like that, we generally get a jump. we generally get a jump. So it's how do you jump in? When do you hear it? Generally, when we hear the news, it's too late. If that makes sense. Generally, when we hear the news, it's too late. So if you would have looked at Morrison's is running sideways for the last year and a half, hasn't really made money, hasn't really lost money. And then all of a sudden, we've had this spike from here. So there's the red bar from there up to now, which is a 50% jump. Okay, so remember, you're trading the news here, but you will get burnt sometimes on the news. You absolutely get burnt on news as well. So just be aware of that. So Disney for me hasn't performed as well as I expected. I'm a little bit annoyed with Disney. I'm down about 6.6%, but it hasn't really gone anywhere since I jumped into it. The second, and I've been a little bit annoyed with it since then, and hasn't really gone anywhere since here. But I do expect the earnings to be good. You have the theme parks are opening up. They're been running for a little while now. Yes, I understand that we have a second wave in some countries. We have all that, but the theme parks have been running. You also have the likes of the Disney Plus has gone on from strength to strength. Hamilton was a huge hit. Then you had the likes of the Marvel, what's that Marvel series, Falcon, and then you have Loki's come out as well. They've been massive hits for the likes of Disney Plus. People are subscribing to it just for the likes of that. Then you have every kid in the country wants it as well. So I do expect this to run. I expect our earnings to be good, and it's earnings season that's coming up will be a massive factor for the likes of this. And if we have good earnings, this will smash this high up here, no doubt in the world. But it's just, I was expecting it to continue going. I wasn't expecting a sell-off, and there's been a pretty decent area. It's been consolidation, and now we've had that jump to the upside here. Now, I have no idea what happens yesterday or why that had a big jump yesterday. No idea, but I would be looking into the expected earnings, but I would expect the earnings to be good and potentially better than expected. But again, I could be wrong. Absolutely. I've been wrong before, and I could definitely be wrong, but I do expect this to continue growing. I don't see any reason why. There's no fundamentals or nothing that I've read or seen coming out here to say that this is not a good place to be in. Anyone got anything they want me to look at? Now, I know I put this into the group yesterday, banks. So the financial sector. So Morgan Stanley. Now, I know Bloomberg is one of these companies that's very friggin', what would you call it, bias. Is it too late to jump into Disney? If you're looking at Disney long-term, then no. Absolutely not. Is it too late to jump in as a CFD? 100% yes. If it's an underlying asset, no. Remember, I'm down 6% on it, so it means if you jump in now, you're in a better position than I am. So it is. Look, yes, there is room for this to go, but this is a play that I think this will run for the next 3 or 4 years. I don't expect this not to run. Once the world actually starts opening up, theme parks start running. We start going back to cinemas, and movies start being released again. We also have the likes of the streaming services. I expect this to have a huge jump because of it. But again, here with the banks have done extremely well over this past year. Okay, since November, since the vaccines come out, they've been on this bull run. And I expect it to continue going. I expect this quarter also to be very good. Now, what's the big driver? Does anyone know the big driving factors with banks and why banks have got on so well over this last year? Does anyone know why? Anyone hazard a guess? Fewer defaults. I don't know. I don't know about that. Fewer defaults, or everyone's going into recession, stuff like that there. So I'm not sure about that. Zero interest rate on borrowing. Yes, interest rates is one. Yes, that's it. Anything else? Consumer activity. Yes, we are spending money online. Yes, we are. We are taking out loans for businesses. We are still stuff like that. The payout controls. Yeah, we're all of that is adding to it. But the big one for the pandemic payments, not really government pumping money in the economy. No, because that's nothing really to do with banks, because just because they're buying up stocks doesn't mean that the companies are necessarily going to see it. On paper, the stock is worth billions, but theoretically they're not. They don't have any liquid cash coming from their stocks. So where it's coming from, a lot of it is IPOs. IPOs is where most of this is coming from. So companies that are initial IPOs or SPACs or stuff like that there, that's where these banks make huge amounts of money, hundreds of millions of pounds from these IPOs. And that's where a lot of these banks are doing extremely well. The likes of the Morgan Stanleys, the Goldman Sachs of this world, that's why they're doing so well. They make absorbent amount of money from IPOs. And we have had a pretty big set of IPOs in 2021 so far, and that's where a lot of these are going. And the IPOs have done well. They've actually jumped. They've gone well. Also, then you add in interest rates. You add in, like you said, loans, stuff like that. There, it's doing well now with interest rates in 2023 potentially changing. Okay, this will also affect the banks, but in a good way as well. So over the next, I would expect the next 6 months, this to continue growing. And the same with the likes of Morgan Stanley, the same with Goldman Sachs. So I am long on banks probably for the next 3 months to 6 months. Okay. But again, obviously I could be wrong, but I don't see anything too massively changing in this. We've had this little bit of a stall here now with we have earnings coming out today, tomorrow, and Wednesday on Goldman Sachs, Wells Fargo, and Morgan Stanley. So we have earnings coming out the next 3 days on all three of these banks. And then we have Wells Fargo. Again, same again, we've come back down to this double bottom down here again, and then Citi. Citi is now made a lower low. Okay, that's interesting. So out of the 4 banks, Citi is the one that has the least technical setup. So yeah, Citibank is not the best of them, if that makes sense. So it's not the one that I would be trading. I'll be looking to trade any of the other 3 other than Citibank. And I was watching Wells Fargo's chief strategical investment officer, and she was basically I'm as long as fuck on banks over the next year. That was her. Now, obviously, she was biased because she was a strategist for banks, but it also helps. Can you please check Domino, please? Okay, let's have a look at Dominoes. Let's go for pizza. Dominoes. So Dominoes had a pretty good run over this pandemic period, and it's no coincidence. It is strived, it's gone on from strength to strength. It's just one of these companies that's, if you bought it, you've just done extremely well. Is it worth jumping in right now? Absolutely not. Stay away from it. We need a pullback into at least this area. At least this area before we are looking at it. We need some sort of pullback on it. Back to there, and then we can go. Anyone jumped in on this pullback here was a really, really nice entry. But the problem is that there's no horizontal level, there's no area. This would have been the area we would have been looking for. So there's no idea. How do we know that this is going to pull off here? So was there some sort of fundamental news in March? Was it earnings? Was it what happened in the beginning of March? What happened for this to take off? Was it earnings? Was there a potential takeover? What does anyone know what happened in Dominoes? Now, vaccines happened in November. So that's when the vaccines happened, was the November. So that's where the catalyst for everything there. So shouldn't have been the vaccines. Cassie just bought a lot of pizzas. Okay. That makes a lot of sense, Kat. Okay, so by people's reactions, they have no idea. They have no idea. So something that's gone on also from strength to strength is in NVIDIA. So NVIDIA is one of those ones where we've traded it quite substantially over the years with CFD trades. We've done extremely well on it, and then it took off. Now, I didn't really take this trade here. Why? Because it didn't give me a trade. It didn't give me a setup. Now we have this. It's kicked off. We now have this nice trend again. So we have our phase one, phase two, phase one, phase two, phase one, phase two. So we need some sort of pullback in this. Now the problem is that this is similar to the likes of the Dominoes story here. We need a pullback. Need some sort of pullback in this. I need something correct. Now, this is sort of the only thing that I can see there to indicate it's the area, because we're at record highs here. This is not something that we're going to buy now. Absolutely not. If you jump on this, you're you get lucky, because are we at the beginning of this move, or are we near the end of this move? We're near the end of this move. Now, why people go, well, Henry, how do you know this is the beginning of the move? Well, or not the end, how do you know this is the end of the move? Well, the idea is that see this high, once it makes a higher high, we expect a phase two. So there's a high, it's now made a higher high, so we expect a phase two. So that's exactly what we're expecting. We're expecting some sort of pullback. It's bound to happen. So once it pulls back and happens, that's where we're looking to jump in on this. Okay. Yeah, the splitting of the stocks on the 20th of July went well for it. Yeah, but we need some sort of pullback. There's no way of jumping in on this at the moment. Apple at the moment is almost at a record high, or it was at a record high. Yesterday was at a record high. Now, we talked about this here potentially being a turn. We talked about this on this level here, and some people took this, some people didn't. It wasn't the best trade in the world. Why? Because the overall trend here was pretty slow. It wasn't really going anywhere. And people were talking about there was a slow uptake on the actual phone. And if you'd have taken that trade, you'd have got triggered in, almost got triggered out, and then look, it took off. So anyone who took that trade, you look, it's gone on from strength to strength. It's exactly what we wanted. It come back into that trend line there, and it is now sort of taken off. Now, we have had that double top here. And if we look at these highs, it generally has a rejection, comes back, takes off. It had a selling day yesterday, so I would expect some sort of rejection and then take off. So if we're looking at this and using that same type of analysis, I'd expect that to come back somewhere into this region and then take off again. If that happens, that would be a really nice entry on the likes of Apple again, but only time will tell. So we'll see where that goes. Can you look at plus? Of course I can, plus 500. So plus 500 was doing extremely well, got on from strength to strength, and now it is treading water. We are stuck between these two levels, horizontal. So bounce, 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 bounce. So you see I haven't taken a high here, and I haven't even taken a high here. What I've done is I've divided this up, found this happy medium, I found the area of best fit. Okay, trying to find the most amount of buys or most amount of bounces. So if you bought this here, you'd expect it to come up and hit this level here. Now, at that level, you then have two choices. If you expect it to drop back down, then you part close your position, because now I would never close the full position, because this, you may be wrong, this may just continue running. So I'd part close the position, take profit, and then I'd put a new order back here again. So if it comes back down, triggers me in, goes again, then part close half again, and the same again, because I'd expect this to continue growing. Plus 500, all these trading desks, they've all done extremely well. They're all, wait till their quarter comes out. I'd expect it to be really, really good. Why? Because retail traders have come in, lost loads of money, and then gone home again. All right, so I'd expect it to be really good. And then all of a sudden, then they have that little bit of a taste for it, and they go, okay, I'll give it another go, I'll give it another try, and then so on and so forth. And that's what happens. ADSK, Autodesk. Something similar happened here. So this has gone on from strength to strength again, and then it's had this little bit of sidewaysness here. Now the difference with this is this sidewaysness is going upwards. It has 1 second. I'll get you guys to name it first. What's this called, guys? Anyone who was able to give me the answer? You fiddlesticks. A double top? Nope. A rising triangle? Yes, but that's not the actual proper name for it. You nearly got it. Nearly got it. Also known as a rising T. A bullish pennant? Nope, that's not a bullish pennant. A rising wedge? Nope, this is not a rising wedge. What shape is it? Come on, guys, look at the shape of it. What shape is that? Okay, sorry, you said a rising pennant. That's a rising pennant. That's not a wedge shape. Okay, so I'll make it a little bit easier for people. What shape is that now? Wow. I had to put in the third line for you guys to understand that's a triangle. So it's ascending triangle. Back to primary school. Come on, guys, you know your shapes. That's all it is. It's a shape. Make sure you're calling it the right things. I know I'm being pedantic there on that, but just make sure you know what it is. Use your shapes, use your words. Okay, so that there is an ascending triangle. Now there's a couple of ways of trading this. One, we can wait for a pullback here. And then the idea would be is you could trade a CFD, so entry there and stop loss below it. Entry there, stop loss below here. So they're the two ways of trading the likes of this, and you expected the breakout to the upside. Or what you guys have been doing with Ben is the breakout bar. Once you have the breakout bar, as long as you have a higher volume on the momentum indicator here, then you would actually buy on the breakout. Once it closes, you buy in the breakout, buy the underlying asset and let it run. Okay, so there's a couple of different ways of trading the likes of this, a breakout, or you can just buy the underlying asset right now and then hold on to it. So that's the idea with that. Right, there's one more stock asked there before we finished up. Volkswagen. So Volkswagen have had huge publicity with the Euros. Okay, Volkswagen has come back nicely into this level. Did anyone take it off this level? Okay, so what's this formation called? Double bottom, absolutely. Absolutely. Well done, anyone who took this. That's what that's called, a double bottom, there and there. Anyone who has taken that, well done. Prime example of it. So the idea would be is I would always take this as a CFD trade. I would never take this as an underlying asset. I would take this as a CFD. Why? We have the overall trend is going up. We've had a pullback down to the level. Okay, now I missed this entry level, missed it. Absolutely, I missed it, which is quite annoying. Okay, I have a ceiling here, so I have a double top. Okay, so I now know that I have a target place to go to. I know that that's a top. So the idea would be is I've come down here and I have a bearish bar. Now the color of this bar here to me is absolutely irrelevant. My entry would be above that red bar. So that's my entry arrow. My stop loss would be below this one. And can anyone tell me where my take profit would be on this particular trade? Can anyone give me the correct number for the take profit? Halfways? No, not halfways. Because this is not a sideways market. This is a bit of a consolidation in an overall trend. Okay, well done. Everyone so far has given me the Bubbles ruined it. I was going to say everyone has given me the correct answer except Bubbles. Okay, so the correct answer here to take profit on this would be see the high here. I'm not looking at this high, so I'm not looking at the high here. That's not where I'm looking at. I'm looking at this. See the open and the close of these bars here. That's the one I'm looking at. So 240 for me is the exact That's where I'm looking to get out. I have no idea of the risk to reward here yet. Couldn't tell you, but that's my exit target, 240. I don't want to be on the spike here, and I don't want to be on this. Now, I know that the overall trend is going up. Now, what I may do when it gets to this point, I might par close my trade. I might par close my trade and close 50% of it, move my stop loss inside break even, and then let the rest of it run. That's probably what I would do. But again, that's the area where we would most likely be looking to take profit, is at 240. We're not hitting this high. We're hitting where the body and the open and the close of those candles have been before, which is at 240 level. So well done, everyone, except Bubbles. Come on, Bubs. You know this. You know this. This is quite basic. Just let's have a look at the risk to reward in this. Measure risk to reward. If we look at this, that trade there is just say 5%, and that there is 16. So there's actually a little over 3-1. Was being greedy. Nothing wrong with a little bit of greed, Bubbles, sometimes. Can you please look at copper? I will have a quick look at copper before we finish up. Copper is becoming a little bit annoying. It is just treading water. It just hasn't sort of gone anywhere. We have this consolidation, this sideways movement. There's absolutely nothing that we can do with this at the moment. It just has to make a decision whether it's going to go up or down. Does anyone know of any fundamentals that's going on with this at the moment? With the race for these lithium batteries going on, stuff like that there, I assume that this is just the demand for copper is just going to continue growing. It depends on whether it is going to start growing now or whether it's going to drop first and then go, but we're eventually going to get a kickoff. And if we look at this, we had this sideways movement. We had it for a month and a half, and then it took off. If we look at it here, we had sideways movement for December, January, 3 months, then it took off. So this is following its pattern. It's not like it doesn't do this. So we had a month here, it took off, and then we had a movement for a month again, and it took off again. So we are getting consolidations and then spikes. Okay, so this is following its usual pattern. It's just one we just want to have to keep a look on. Okay, everyone, if you want to know more about the markets, if you want to know more, if you're not in and out, traderstream.co.uk. If you want to know about gold, if you want to know about silver, if you want to know about all of that stuff, jump in on your free months here on traderstream.co.uk. Jump in on this. There we are. So anyone who wants to jump in on this, anyone who wants to know anything about any more in detail about any of the other markets, whether it's FX, as you know, I do an FX watch list every Sunday. So I do it every Sunday. Then I do stocks every Wednesday, and then anything you want to know in between. So just jump on there, get your free months, use it for 30 days. If you don't like it, then get rid of it. If you think myself and Ben will give you value and it's beneficial, just jump on board, guys. Hope you have a lovely day, and this is the link here. Thanks very much, and hope you have a lovely evening, everyone. Bye-bye.